So today is the 7th day of November 2012, and I think this is the 4th video that I've done for today. So essentially, I guess it's the final. Usually it's 0 or 1, mostly 1 a day. But anyway, last weekend I stated 4 different stocks for this game, and this is all this really is nothing more than a game theory, which is using math, using strategy to your advantage kind of deal. Well, I stated in this one to wait for a move to 4180. Now, Fibonacci was 4198. So I just went a little below it because it usually pierces below it a bit. So why not get a better risk versus reward? This way, I'm still going to stop in the 4130 area. So instead of having a 50-cent risk, or no, I do have a 50-cent risk instead of a 64 or 65-cent risk. Anyway, today, AEP with the 4180 entry hit a bottom today of 4180. You can see the number on the left-hand side, so that would be a play. Now, you can brag all you want that you hit the bottom. That's only half good right now if you were to play something like this, because you could easily lose. Therefore, the way the game would be played is if it goes down to 4130, even tomorrow losing less than 1%, GG, you lose. That's how the game is played. And the problem, of course, with this game a lot of times, which is what really ticks me off about the markets, how, they close at a certain time. I actually did a video. I didn't record it. I was going to do a video on the S&P 500 and the volatility it has when the markets close. It's almost like having a gas station that closes but still doing business kind of deal, or whatever. So what I'm saying is, you never know how these gaps are going to look. Like, look at this here. It closed at 43.31 yesterday, and it gapped open at 42.25. So it was down over $1 or 3%. So here we are trying to risk that little bit. So that's why if you can get saved through the overnight markets, whether you can play overnight. I never did. It was always just in and out for the day kind of deal when you play. But when you have that situation come in, I don't know exactly how it should work, because I know these things trade overnight. I can't even see how this thing does after hours. I can see how the Dow Jones and the S&P 500 futures do, but I can't see how particular stocks do. Anyway, enough about that. I'm just going to track to see how it does, and let's now look at some stuff for today that was fairly interesting within the Dow Jones Industrial Average, because I'm interested about this 18 average band here. If anyone else uses it, because I know it's available, as you can see it here on this version here, that you can put the 18 average of highs, lows, and closes in. I tried it once. I was like, man, it looked pretty good just trying it for the first time. I don't know why this line is in. I think it's a line I put in a long time ago. I put this line in today. And I felt that it was a good time at that exact price, when it was at that price, it was a good first short for the day. If we look at this on the 1 minute time frame, this is how I see this 18 average band, how it tried to get above it, went below. Now this line wasn't there at the time, of course, but came into the band, broken below, and now I can see that the 61.8 from this level to this level here was just breaking down. End of the day. Also, what I noticed too was the volume was really interesting too. And I want to talk about volume for earlier in the day. But what I noticed here was the low volume was on these moves here, which was bring the market higher at the end. So I figured probably going to be lower for the day. And of course, big down day. Wouldn't be a surprise if there's just one final push at the end of the day. Now, earlier in that day, I want to show you something interesting as well. Look at this larger volume. That's extremely common for volume highs to be at significant tops and lows. Now, of course, at this time, you're not going to say that's the bottom. In fact, I would probably say, no, it's not going to be. We might have another big wave lower, I would think. But as we're starting to see this sideways congestion come in, on lower volume, you're moving through with the 18 average. Wait a second here. Maybe by this time here, which is like close to lunch, maybe 11:50. Ooh, the bias looks higher. And you can see any good entry points right in here. How well did it do? You got some good gains. So that's just some of the different things to look at. But again, I'm interested, and I would like to find out from comments below if anyone else is using the 18. I don't want to use a 20 or 22 average, or you know what? I want to show something big here, and I don't think it works too well, but when you got charts with all these ticks, this is like 500 ticks. 18 averages don't cut it. So let's just play around with this and maybe put in a 100 average in for all of them, and just see how it looks for this, because that's the key. And the more periods you look at, I think the longer the averages should be. So you don't really got the same effect with the highs and the lows. Instead, you have the regular base 100 period average. And if you do this very short term, then maybe use a 7. But anyway, thank you for tuning in, and take care.